Happy Monday, traders. So, how to mark up your charts in preparation for your session ahead of time. So, I look at the market from a top down perspective and then work from bottom up when I'm at my desk during my session. So, I do my foundation analysis well ahead. Being Asia, I'm a US trader, so plenty of time to take this nice and slow, get it right, get well prepared for my session. And then what I'm doing when I come in to trade the Wall Street Open is I'm looking for the bottom up analysis to match my top down analysis. And then we may or may not have a trading opportunity. So, what I'm essentially looking for, I'm hunting out the best trade setups um, in accordance to the plays that I trade, um, and um, that will be born from a well engineered chart. So, what I'm looking for markets. When I talk about a well engineered chart, I'm looking for markets that are in breakout. I'm looking for price discovery and the volatility in line with the trend to trade. I want to avoid markets that are coiled, that are indecisive, that are essentially in balance. I'm looking for markets that are out of balance, and that chart will give me one of a number of plays. Um, they are market structures that are recognizable and for which we have high probability setups born from. So that's a whole new video for a different day. But this is basically the basis of everything. This is where we start. We start from a top-down analysis. We zoom out and we look at the bigger picture, and then we're trying to trade. We're trying to match our trade setups aligned with that bigger picture thesis. And we've also we're going to have like Bruce Lee, be like water. We're gonna be fluid with our approach. We're not just marrying ourselves to one thesis. We'll have a bullish and bearish thesis, and one that could be neutral. Markets do one of three things: they break out, and they pull back and continue, fail, or they range. So it's only ever going to be one of three things. So we're looking for one of those three things, and then looking to either sit on our hands or trade in line. So the first thing what I'll do is I'll look at what day are we on. Each day has its characteristic. A Monday can be an all-day runner, depending on how Friday closed, depending on how the week prior closed. It can be a day that chops around. It could be a narrow range day. It can close inside, and those are the types of characteristics that a Monday will have. So, with that in mind, on the right hand side, what I'm using here, I know this all looks like a hot mess, but I'm just marking up the charts. This is not something to trade from. This is my pre-market analysis that will help me come to a conclusion one way or the other, and then we can clear up the charts and get prepared for a cleaner chart that we can actually analyze the price behavior at levels from. So I'm using the Fakeout Highlighter, which is an indicator. If you want to get in touch with me, I can get you access to it, to show me the context of the market at a glance. So what I'm looking for, as I said, are markets that are in price discovery, closing and breakout, or I'm looking for signal days. And this does a very good job of showing me the way. So what we've got here currently, this is Asia opened, and it's a yellow bar. That's inside, and this is aligned with, it's all color coordinated across our trend predator trading tools. So inside bar, an inside bar, when it closes, that's a signal day. Again, that's a video for a different day. If you want to go to my YouTube channel, I've done quite a lot on inside days. It's actually one of my go-to signal days, in fact. Friday is a close day, and that's an outside day. So that also is a signal day. So let's get into that. Being an outside day, that could lead, typically because Monday being a Monday, the opening range of the week, we might not get much activity. On the calendar, it's not until Friday. I believe Friday we've got CPI. It's probably the only thing that I'm really looking out for in terms of major red news. I'll glance at that again later on. But Monday could well be a peaceful day for us all, not sure, and close inside because Friday was such a wide range outside day. But being an outside day, first of all, what I need to do is mark up the levels. So an outside day, in this case, it's broken out of Thursday's highs and then come back inside. And then it's broken out of Thursday's lows and it's closed back inside. So we've got a peak formation high, peak formation low. It's a day zero scenario. Typically, that would be followed by an inside day. You'd have to go and have a look at that on your charts. But generally speaking, a day zero, we've taken out the high, taken out the low, and closed back inside. Leads to a squeeze in the price, a coil, and can lead to explosive breakouts over a 3-day cycle. So Tuesday could be quite an interesting day if Monday closes as an inside day. But for today, what I would anticipate is that the price, depending on where we are in the cycle, could either close an inside day, so we might get a scalp opportunity, or we might get an all-day runner, a Monday runner, in line with the day count. So what is the day count? Well, it's a thesis that the market behaves in threes, cycles of three, be it months, weeks, multiple time frame, all the way down to 5-minute bars, 15-minute pushes, 3 sessions of rise, 3 hours of rise, and a dump. Those are the types of plays when we talk about the cycles of three, and we can apply that to a daily chart. So if we look at the 3-day cycle, today, Monday, is day 2 of the 3-day cycle day count. Friday was day 1. It closes a day 1. Now, it started off looking like it would be a day 1 shorts, but when it came down and broke Thursday's low and then closed back inside, that could be a day 1 reset long. And what we've done is we've trapped traders short, and now we're pulling away from them on day 2, and that could lead to a day 2 runner, pulling away from trap volume. So how does that day count start off from? Well, if we look at the prior week, the day count starts from a high and low of a week. That's when it's resets. So we got a reset on Wednesday, 2 weeks ago, Wednesday, day 1 shorts, day 2 shorts, and then we got a day 3 reversal trade opportunity, which was on, which closed an inside day. Now, an inside day, funnily enough, you'll actually wouldn't count that as a day 3, although we did get a day 3 setup. You don't carry over the day count. So in this case, we skip that and it resets on Monday as a day 3. So day 1, day 2, inside day, Monday, day 3. Day 3 automatically converts to a day 1 at the close. This resets the day count. So day 1 Monday, day 2 Tuesday, day 3 Wednesday, longs. Day 1 Wednesday, resets. Day 1, day 2, day 3 Friday. Okay, so day 3 Friday. We get a reset down here because we break back above Thursday's lows. So day 1 longs are back in the market. Day 2 could be an all-day runner. I would not want to counter trend today's market unless we get back below Thursday's low. So those are my scenarios for today, essentially. Long above Thursday's lows, but this is where we need to zoom out and we're looking at the profile, the market profile of last week, and we can see that we could come unstuck here if we're holding on to positions into this high volume node. So we've got a wide open space here that we're clearing here in Asia by the looks of things, and we're heading up into that resistance area. So just mark that level or that area, I wouldn't call it an exact level, but that area of potential resistance. That could be where we end the day, and it could turn out to be an inside day, and that being the high of the day. Beyond that, we've got the value area high of last week, so a space to move up into there and test there. And then beyond there, we've got Thursday's highs. Thursday's highs are a switch level. If we get above Thursday's highs, then it looks like we've got prospects of a continuation or perhaps just testing up through here into the darkened area there of the volume for a retest of Friday's highs. It could happen. I wouldn't anticipate it on a Monday, but who knows? It's just the opening range of the week. We'll have to wait and see. So we'll see where the land lies when we come into the Wall Street session. But for now, we've marked off the levels that we need to monitor in terms of being zoomed out in preparation for looking at how Asia and London behaved, looking at the levels, the highs and lows of Asia and London, where the volume is being trapped throughout Monday. I mean, if Monday is closing as an inside day, then I expect three bottoms, working the low and working the high and closing. And that may well be a scenario that, for instance, let's say we pump up here in Asia, which is what we're doing, and then we come back down. Perhaps we'll come lower. We might even sweep the Asian lows, put in a low. That's dragging traders down in anticipation that they're going to get let off. So all those that are shorting the market are now under heat. They could well be adding to their position. Who knows? But the price could well come down, take out the lows of Asia, encourage more selling into, don't forget, what is already a high volume area with the point control. Trap traders, day one reset down here. So longs that are already trapped may not let them off. Encourage selling. Shorts that are trapped may not let them off. Encourage further selling. Another trap just to trap and go. There might be a scalping opportunity in London. Either or London or New York. Maybe that happened the gap time ahead of New York. Maybe all this will unfold during London and fizzle out. And then we'll have to see how the market behaves on Tuesday. But various scenarios, but generally speaking, an inside day I'll be looking for three bottoms or three tops and a potential scalping opportunity if we are narrow range. Not something that I generally want to partake in. Would not be my go-to setup. Trying to trade inside of an outside day in a narrow range day at the start of the week would be highly treacherous, but it could pan out. I'd be more inclined to short the market below Thursday's lows, the switch level, or trade in line with the trend. And what's extremely useful is having the trading companion being the Trend Predator Pro, giving me the information that I want to be trading in line with the context. And the context is a reversal continuation into uptrend. So we are reversing and continuing with the uptrend. So that's the uptrend. We've got a highly bullish market on the monthly chart. We've got breakouts on the weekly chart. We're currently inside of last week's range, but we're nicely bid above the previous week's highs. So we've got a market that's in breakout. I don't really want to be counter trending that unless we are confirmed that we are indeed breaking down. And that line in the sand is Thursday's lows currently. All right, so let's see how the land lies when we come into New York. And what we're doing in New York is looking at how did the price behave throughout Asia and London? Does it align with our bullish thesis, which we have at the moment? We're looking for a continuation trade on a Monday, potentially an all-day runner to the upside, a parabolic day in line with the underlying trend, with traders trapped short by the close of Friday.